Hi guys, happy weekend everyone. We are back to business after the big joy of last week. We continue talking about stocks, and especially this is the most weighted video of the month because we talk about insider activities, which is critical for us retail investors to understand whether it's a good time to buy the market, if it's a bad time, if insiders are dumping all their positions, which are the most interesting sectors we want to buy right now. So this is a really critical video which we show in the channel every month. If you appreciate, please subscribe to the channel and leave a like to the video. Let's start. So the first thing, guys, you can find all the details of that we will show today in the Patreon portfolio. If you want to join to sustain the channel, it would be really appreciated. Link in the description below. So this month we have a very interesting situation because we have a better ratios buy to sell than in the previous month, which is a bit surprising because as you can see, we are a lot higher, for example, than we were in December or in January, but we had 20% buys to sell. We had 194 stocks were bought and 967 were sold, which is very interesting because even insiders seem to be a little bit confused because yes, they were like a lot less net buyer in December than today. And what could be the explanation of that? The explanation of that is that there are a lot of sectors which continue to be undervalued because the rally has been very specific to some sectors. So there is a lot still of opportunities in this market that we can buy, as we can see from 194, which is one of the highest number we had in the last month. Very interesting. And I prepared this month some new charts for you. Okay, let's have a look, first of all, at the sectors that were, how much they were bought and how much they were sold. So here you got the totals. First of all, the totals. We can see that there is a lot of buying activity in finance with 48 buys, and also in medical. They continue to be the most bought sector. While if we look in total terms, like the best ratios buy to sell is conglomerate, then finance and medical remain ones where the percentage buys to sells were higher. Auto, tire, trucks. Where you really need to be scared, guys, is construction, because constructions we had only sell. This is very scared. It's also consumer staples, aerospace. So these are the sectors where we had the most sell. But what I did this month, in order to help you, like I'm counting the number of buys and sells towards the number of total stocks. So let me show you guys. We have, let me make it bigger. For example, auto tires. We had 3.70% of buys, almost 4% of stocks were bought, like 14% were sold. So you see that, for example, business service, it's not so bullish because 16% were sold while 2.73 were bought. Like, I think it might be good to add a ratios like buys to sell, which could help us figure out like the best approach, like buys to sell. So auto tires 25% buys to sell. One of the most bought was consumer discretionary because it was 30% buy to sell. Finance and medical. So the usual one. In conglomerates, we saw that there is a very good percent buys to sell. So the best sector where we can focus our opportunities are finance, are conglomerates, medical, auto tires. Let me also put some conditional formatting that will even better show you. So like these are the sectors where we really see some pressure of insiders. What were the industries that were the most bought? So industries are smaller samples. As always, in the last month, there is a lot of interest in biomedical and genetics. REIT that have not been performing very well were among the most bought. There continues to be interest in bank, medical instruments, so medical is still one of the best sectors to invest in the long term. And we also have technology, which is very, very interesting. What I did, guys, this is a very, 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 is a new chart that I create for you. It's about the money spent on buying, and it compares to the average. For example, I'm looking in a month. This is, for example, yes, I want you to see this month here, which is May 2023. Like, out of the total money that was spent, 100%, 24% was spent on oil and energy. Maybe let me make this very small and we are just counting the money here, not the numbers of transaction and so on. Just the money spent. So 24% of investments went to oil and energy, 14% went to medical, 13% went to consumer discretionary, and 90% went to business service. And I'm also comparing towards the average of last month. So what it tells me is that, for example, transportation, this month we had 152 million. The average of last month was 34 million. So we have a lot more interest this month than last month. I need to change the formula. I need to put, I think it's good. Let me see. Yes, 49, aerospace, we spent 4.8, sorry, 4.8. The average of last month was 9.6. You see this number versus this number. So we are not extremely aggressive because we bought less than the average of the last 9 months. Where we are buying hard was consumer staple because we bought 248% of the last 3 months, which is good. And we sold 73% of the average of the last 9 months, sorry. So this is bullish. So if this number is bigger than 1, the total is bigger than 1, then is bullish. If the total is smaller than 1, I think is bearish. So you will see as well, let me put also conditional formatting. Yes, the most bullish sectors could be aerospace, could be in particular consumer staples, still finance, still industrials. Why? Because we have a lot more buys than sells compared to the last month. Where you need to be very careful is transportation, oil, medical, and construction, because construction there was not a single buy. So if you made money with stocks like the home builders, Tool Brothers, things like that, it might have become time to sell. And here, on the other hand, you find the sectors where insiders are getting more bullish. Consumer staple, finance, industrial products, aerospace. So these are the sectors where really there is a lot of pressure compared to the last month. So guys, what is the final picture? The final picture is that insiders are still buying in spite of the market being very high. They are, of course, not focusing on technology, even if technology continues to go up. We can see computer and technology, yes, that we had 25% buys of the last month. Of the last month's average, we had 42% sell. So, they are more selling than buying. Insiders are really not going and buying Nvidia or buying Microsoft. They made money on that and they are rather dumping. But there are sectors that are still undervalued. Let me know in the comments what you think. Thank you, and I wish you a wonderful, wonderful weekend.